Hi class, this video is going to go through how to complete exercise 8.5 of your textbook. This you'll find on page 131 and your workbook on page 92. So I always recommend to have both open, pause the video as we go and work through it with me. This question has a number of parts and we're going to create a statement of receipts and payments from a list of transactions, and you can see those list of transactions on the left side of this video. Not only that, we're then going to make an income statement using the same 10 transactions. So if you can complete this, you will have created two really important reports. The statement of receipts and payments, where we record cash inflows and outflows, and the income statement, where we record revenue and expenses and ultimately profit. If you can do this, you are going to show a really good understanding of the difference between cash and profit and be able to identify look at a transaction and determine which one is relevant for or both. Let's have a look at this question in a bit more detail and then we'll start going through this question. So what is this question for? We as a business are Maximum Mowing and this business is owned by a guy called Max House. We have been given 10 transactions, and these 10 transactions are for February down there. And how do we know it's February? Because it says this data was for February 2023. We've been asked 3 questions. We've been asked to prepare a statement of receipts and payments, prepare an income statement, and then to think about a qualitative characteristic of relevance for one of these items. We're going to go through each of these. This page will focus purely on creating the statement of receipts and payments. And you can see that I've already created the heading that we always write in our reports. We say the business name, tick, we say the type of report, statement of receipts and payments, and we say for what time period it is. What do we do when we're creating a statement of receipts and payments? We list all the cash receipts. We identify all the cash payments to work out, is there an excess of receipts over payments? Have we made more cash than paid over the period? And then we're going to think about what is the impact to our bank account, because we probably have had some money in that bank account before this period. How do we start this question? Well, we look at these transactions and ultimately do 2 things. Our first thing we ask, is it a cash transaction? And then secondly, we're going to ask, is it a receipt or a payment? So let's go through this. The first one on February 1 says that cash at bank is at 1st of February is $540, and there is a GST liability at 1st of February of $840. Is this a cash transaction? There is some part of this that is impacting cash, so I'm going to put a little C there. We know that at the start of the period, we have $540 worth of cash. It's not a receipt or payment, it is just it at the moment. The 2nd of February, the owner contributes $2,000 as capital. The owner has given cash to the business. So is it cash? Absolutely. Is this a receipt of cash or a payment of cash for this business? The business has received cash. Their bank account has gone up, so it's a receipt. So we're going to write it in the cash receipts section. Capital has resulted in $2,000 of cash coming into our business. Remembering, we write the subtotals on the left column and only the end total on the right. Number 3 says the cost of fuel for the month was $320 and this was paid in cash, plus $60 was still owing, and there was GST paid of $32. There's a lot going on here. Is this transaction got anything to do with cash? Yes. Some part of this fuel has been paid in cash. $320 and the GST paid. So this is now a cash payment. We have paid $320 for fuel. And then we're going to, because we know there might be some other times when we pay GST, so let's just keep a running tally of how much GST we've paid, because we're not going to put each of them individually, we'll have a total at the end. We'll also put a running total of GST collected, because we know almost certainly that there will be a heading somewhere in our receipts of GST collected. We just don't know the amount, and we don't know the amount of our GST paid, but we know there is definitely some there. But we've ticked off the third and the fourth, on the second and the third, sorry. On the fourth equipment, we purchased equipment for cash, so clearly it's a cash transaction. It was for $2,500 plus GST of $250. We have purchased equipment with cash, which means we have paid cash. So we now have a cash payment of equipment, $2,500, and let's keep our running tally of GST paid, $250. On the fifth, advertising costs were paid of $430 plus GST. Paid means we've got a cash payment, which means we have another cash payment here of advertising. Our advertising we paid for here was $430, and we also paid $43 of GST. So you can see why we haven't put the total of GST paid in anywhere, because we're keeping on running up a tally. The next one was on the 6th. We made a cash withdrawal by the owner of $750. Clearly it's a cash transaction, and it is a payment because we only write the reports in relation to our business. The owner has withdrawn cash, which means our our business bank account has gone down by $750. So it's a cash payment. And for those that are really good with their terminology in accounting, we call this a drawing. What do you also notice about this one? No GST. We have also now looked at the number 7. We've received fees. So we've got a receipt of $1,800. And we've also received $180 of GST. So it is a cash receipt. We've collected $180, so we'll keep a running tally there. And let's call this mowing fees, because the fees are for a mowing business. But if you wrote fees there, it'd probably be okay too. What were our mowing fees? $1,800. On the 8th, we did repairs to our mowers of $220. And that means we have done cash, but it's been a payment. We've paid cash to repair our mower. So we've got repairs to mower. And that was for $220. But let's not forget we also paid $22 of GST here. Finally, and I think this is finally, we made a loan repayment of $900. So that's a cash payment because we've paid back some of our loan. And so we're going to call it a loan repayment for $800. You note that there's no GST here. There is only ever GST on sales and purchases of goods or services. This is just a paying back a loan. Finally, we have a telephone bill for the month of $90, but it is not yet paid. So it is not cash. So do we put this in here? No, because we're only recording cash inflows, our cash receipts, and our cash outflows and cash payments. Now's the time to do the last little bit. Our GST collected was $180. And if we sum all these up, it will come to $347. So our GST paid was $347. Then we pull out our calculator and total these up. The total cash receipts for our month of February was $3,980. We always put the total in the left column and then transfer it to the right to make it all look neat. And the cash that we paid for this month was $5,367. Did we make or lose cash in this month? It's clear that we have lost cash. We have a shortfall of cash. We do not have an excess of receipts or payments. We've actually lost cash in this month. Using your calculator, you would see that we have made a loss in cash of $1,387. This $3,980 minus $5,367. Did we start with cash in our bank account? We actually did. We started with $540. You'll always find that somewhere in your question, which means at the end of February, we have a shortfall of $847. For the keen accountants in the room, this means that we have a bank overdraft, so a current liability of $847. And guys, that is how you create a statement of receipts and payments from transactions. Again, still quite complicated, but you follow the 2 steps. You look at each transaction and say, is it a cash transaction? If you can tick that one off, you move on to ask, is it a receipt or payment? And then you add it to either the cash receipts, if it's a receipts, or a cash payments, if it's a payment. And I would always recommend that you keep a running tally of the GST paid and GST collected until the end of the month, so you can just put that number in. Now, as an accountant, you should stop, and even though this question doesn't ask you to do this, and go, is this good business? What is my advice? You've got a business that has lost cash for the month. Is this a good or bad thing? We don't know yet, but you might be able to give them some advice. We're not going to go through that now because we're now going to make an income statement. So if you look at this, the very bottom section should recognize a bit because this is actually a much neater version of the statement of receipts and payments that we made just previously. This is our statement of receipts and payments for February, and you can see that we've come up with this exact same amount of the bank balance, which makes us pretty comfortable that it is correct. We now have to create an income statement. We know that cash does not equal profit. Cash is cash receipts minus cash payments. Profit is revenue minus expenses. Very different concept. And revenue has 3 tests. Is it an inflow of benefit? Has it increased my assets? And has it increased my owner's equity? Only if you can tick all 3 of these off is it a revenue. Let's go through and identify the revenues. We have 3 receipts. However, only one of them is a revenue, and that one is mowing fees. So let's write that one in. We've got mowing fees, and our mowing fees were $1,800. It's the only revenue, and we'll go through that in a second, but because it's the only one, you can just write it straight on the right-hand side. So we can tick that one off. Why is capital not revenue? Because there is a specific rule, and it's almost the 4th unwritten rule, that it cannot be capital contribution. It's not fair to say that a business has made profit just because the business owner has given money to the bank, to the business. It's a separate situation, so we don't include it. GST has nothing to do with revenue because we are just a tax collector. While it has nothing to do with an increase in assets or an increase in owner's equity, we are just collecting GST and giving it to the government. We also need to just stop and do a quick check to make sure that there were no revenue that was not cash. It might be some credit sales, which could impact our revenue, but we've already gone through these transactions and there is no credit transactions here. So we can be really confident, interestingly, that even though we said we made $3,980 of cash, we've only got $1,800 of revenue. Let's now think about the expenses. We have one, two, three, four, 5, 6, 7 cash payments, but I can tell you there are only 4 expenses, and one of them isn't even included on that sheet. Let's write them down and then explain why these are expenses and the other ones are not. Advertising is an expense. Repair to mowers is repair of mower. Fuel is one. And finally, there is one final one that is an expense, even though we haven't got it as a cash payment, called telephone. Advertising, so let's tick that one off, is an expense. There is a separate test for expenses. In fact, you could argue that there is 3, but even 4 things that need to happen. There must be an outflow. There must be an outflow of benefit that leads to a decrease in assets, that leads to a decrease in owner's equity. That is not drawing. So you can see that we had drawings here, cash going out of our business because it's going to our owner, but that is not one of our expenses because it's a specific rule. Advertising is, and I'm putting it in the left side because there is more than one. Advertising is an outflow of benefit because we are paying cash out of our business. It has led to a decrease in assets because our cash has gone down. So really quickly, our cash has gone down. There has been no change to any other assets because there is no other assets that's been purchased or anything. And there is no change in our liabilities because advertising is not a liability. So the only way our accounting equation, assets equals liabilities plus owner's equity, can balance is if owner's equity goes down, so advertising. This is the exact same situation for the repair of mower, our fuel, and our telephone. You might, if you've got a keen eye, notice that there is a difference between the number that we've put in here and fuel and as our number here. Why did I get this? Because we don't care, expenses aren't just cash. Expenses are just an outflow of benefit. Not only is the cash an expense of fuel, the amount that we owe is still an expense as well, because it is still an outflow of benefit because not an asset has gone up, but there has been an increase in a liability. We owe money to them. And the telephone is the exact same one. We have got an increase in a liability here, so telephone. If we add all these up, we come up with $1,120 of expenses, which then results in our profit of $680. Now guys, this is still a relatively new concept. What are the other ones that aren't? So if we think of this, fuel is an expense, Mowers is an expense. Equipment is not an expense because one asset goes down, cash, but we've also got a new asset, equipment. These cancel out, and so there is no change in owner's equity. Loan repayment is not an expense because, yes, assets go down, cash, but owner's equity doesn't go down because our liability goes down, our loan. So if we think about this, our accounting equation, assets plus equals liabilities plus owner's equity, if these two are impacted, then this one is not, and hence it's not an expense. So guys, that's relatively quick. I've skimmed over some of it. We will continue to get better and better and better at this and in a few months' time, we will be second nature at recognizing expenses and understanding they're different to cash. Well done to getting to the end. Have a look at the solutions and keep practicing building statement of receipts and payments and income statements.